macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. Now let's take a look at that gold trend that seems to be powering ever higher with Kevin Cook, our senior stock strategist at Zacks.com. Boy, I can't believe that gold is at $1,600 an ounce. It was just in, under 1,000, it seemed, last time I looked. And this is a trend that appears to be for real. It's not going away here. What's driving this?
Absolutely. I was not a believer in gold a couple of years ago. I called it the barbarous relic. But, the trend is here to stay. It's powering higher. Part of it is fueled by quantitative easing. Gold was in a steady uptrend for the last decade. Credit crisis took it down a little bit, but that was your last chance to buy gold under $1,000. And we're printing dollars. Gold is priced in dollars, so that's why you're seeing it at $1,600. Let's take a look at a chart here of the recent trend and what we're seeing. This is from a currency broker, FXCM. Great chart analysis they did this morning. And the red arrows are big surges that gold had. So from July to November of last year, gold moved about $275 higher in this channel it's trading in. Went sideways for a little bit lower, bottoms again off that channel, makes another $275 surge this year from January to May, from 1,300 almost to 1,600. So the trend is still in motion. Gold has been riding its 50-day moving average just in a nice wave higher for several years now, since the credit crisis lows, and just touches its 200-day moving average as strong support. So the target here looks like it could be $1,750 for gold this year.
Interesting. You wrote in the past that gold miners are not necessarily the best investment because of past hedging practices. Tell us a little bit about that.
Yeah, so you have major gold producers that always have a practice of hedging forward, meaning they sell gold in advance. Say, hey, we're pulling out of the ground, but we'd like to lock in a price now,
right,
just to cover their costs, right? Well, some of them may have done that for years, say 5 years ago, and locked in much lower prices, say at $600, just because they wanted to cover their costs, and they're still obligated to some of those contracts. Now, that's an extreme example of a gold producer being locked in to $600, but it has happened. And so just because gold is over $1,400 doesn't mean they're raking in all that profit. It costs around $400 to $500 to get gold out of the ground and finish it and produce it, right? So it would seem like, hey, they're making $1,000 profit an ounce, but not if they're locked into bad old hedges. So on April 1st, I did a trade. I bought the GLD, the ETF for gold, and I sold GDX, the basket of miners, and that spread 18% underperformance by the GDX basket of miners.
Can't you just see the Aiden sisters doing a jig down in Costa Rica now? See, we told you it was for real. You got a couple of stocks for us to look at?
Yeah, so I pointed out, you got to be careful with the miners. You really have to dig deep and see what are the earnings momentum for a given miner, and pay attention. So I'm going to look at 3 stocks here. Barrick, obviously one of the big holdings of the GDX basket of miners. And Barrick has basically underperformed. It's actually starting to turn a corner here with its earnings, though, a little bit. And you can see what I've got high. I have a column for the forward PE. So Barrick's got an 11 forward PE. 2011 and 2012 earnings equate to almost 8% growth. Goldfields, much better looking here. 12 PE, look at that earnings growth from 2011 to 2012, 50% earnings growth. And then Randgold, also strong earnings growth, but a much higher PE. So you really have to drill down here and look at your top stocks. And it seems like Goldfields is one of the better buys here. I was a buyer of Freeport-McMoRan when it was trading down 46.48. Now that's up to 55. So you're seeing some profit taking there. But Freeport has always been a strong copper and gold company because it has such strong free cash flow.
So it really doesn't look like the price of the metal, has any top end in sight.
It doesn't. Not with that trend. That chart we looked at earlier. It's definitely headed $1,750 this year.
Interesting. Thanks a lot.
All right.
You can see some other articles that Kevin has written, including a text version of the article that deals with what we just talked about, on our website, Zacks.com. You just go to the homepage and you scroll down until you see Kevin's picture, and the live link next to it is his most recent story that he has written. And then if you get through that and you go down to the bottom of that story page, you can go to an archive of some others. With Kevin Cook, I'm Terry Ruffalo.